Well, those are the headlines that we're tracking for you all evening on ET Now. Well, first up, let's introduce our very special guest for today. We have with us Mr. Mahesh Patil. He is the Chief Investment Officer at Aditya Birla Sunlife Mutual Fund. Mr. Patil, thank you so much for taking our time and joining us today on the show. So to start with, let's talk about the multi-cap fund offering that you've just about launched. A very interesting one at that. We understand that it's going to be open till the 3rd of May, and it's a multi-cap fund. To start off with, why don't you just introduce it for us? Because now, as per SEBI, of course, a multi-cap fund means it will be equally spread across different, sizes of companies.
Yeah, so this is a new category of fund, multi-cap fund, which is now been created. Earlier, we had the flexi-cap funds, where there was a liberty to have mid-cap, small-cap, any percentage. But this is a category where there is a clear demarcation, in terms of how much mid-cap, small-cap, and large-cap, which is 25% each in the mid-cap, small-cap, and large-cap category, which the fund needs to have at any point in time. So from an investor perspective, it is very clear in terms of the asset allocation, what will be there across these market capitalization. So in a sense, it's a very well diversified portfolio, which is there across the market capitalization. And we think that this is a fund which a multi-cap fund can be a core part of your portfolio. And especially at this point in time, we are seeing that in the marketplace, after the recovery back from the COVID crisis, while we are seeing another second phase coming through, but it's a short-term issue, the breadth of the market is starting to improve significantly. And we believe that going forward, also India's recovery on this phase should be much more sustainable. And we will be in a period of a very steady economic growth, around 7% or so. And during periods of strong economic growth, economic recovery, we see that the market breadth improves, the mid-caps and small caps do better because their earnings are more linked to the domestic growth. And we see that similar phase in, say, 2004 to 2008, where we had the GDP growth, which was in excess of around 8%. And that period, the mid-cap and small-cap indices almost gave a return which was twice that of the Nifty. Similar thing we observed from 2013 to 2018, where again the GDP growth was around 7% plus. So I think we are entering in this phase now, where we expect the growth to be strong over the next 3 to 5 years. And in that period, a broad-based portfolio with a good weightage across mid-cap and small-cap, we think should do well. And that's why it is a good time for investors to look at a multi-cap fund, which can provide that solution at this point in time. And in that sense, I think the timing for this fund is appropriate at this point in time.
Okay, Mr. Patil, if I must ask you now about the risk and return outlook. While of course you're going to have equal weightage now in large caps, mid caps, and small caps, large caps are generally known to be a bit more stable in terms of their price momentum and volatility. But can't say the same about mid caps and small caps. So how would you sort of rate the whole risk and return framework of the fund?
So as I mentioned earlier, this fund is kind of fits into the overall diversified fund category, the flexi cap fund. So in the risk return framework, if you look at all the equity funds, starting with the large cap fund, they will be lower in the risk returns spectrum, where the mid cap exposure would vary between 5% to 15%. Then we have the flexi cap funds, where typically, we've seen the marketplace, the funds in that category would have mid-cap varying between around, say, 15% to around 35% in that range. And then we have the large and mid-cap category, where the mid-cap and small-cap exposure is between 35 to 55%. I think the multi-cap funds will come above that in terms of the risk return, where because the mid-cap and small-cap exposure there would typically vary between 55 to 65%. And then we have the mid-cap category, right, where the mid-cap minimum allocation is around 65%. So in the risk return spectrum, I think that's where it will fit. It can be looked at as a slightly aggressive flexi cap fund because of the larger allocation towards mid and small cap. So that's the, I think, positioning of the multi-cap fund on the risk return framework.
Okay. Now, Mr. Patil, let's talk about the suitability as well. Every investor is different. Her or his time horizon as well is different. So before I, or any of our viewers consider subscribing to this NFO, what should be the time horizon they should keep in mind, and also the objective? Because we often say, right, in personal finance parlance, that when you invest your money in mutual funds, you must, keep some sort of an objective in mind. Be it for education, for payment, for purchase of a house, etc. So what kind of investors would a fund like this be suitable for?
So investors, again, this fund can be a core part of your portfolio, because this fund can actually replace your flexi cap allocation as well as your allocation towards a mid cap and a small cap fund. And typically, that allocation would be around 50%. And maybe advise that around 35% should be in a flexi cap and 15-20% should be in mid and small cap. You can actually replace the allocation towards all these three category of funds by this one multi-cap fund. So in that sense, it can be a core part. And in terms of the investment horizon, I would say that since it is having a decent exposure to mid cap and small cap, one should have a slightly longer term horizon. So ideally, a 5-year horizon is what one should have when one is looking to invest in this multi-cap fund, because that will be a good enough time frame to take care of the market ups and downs, which could potentially be there, and give a fair amount of time to play out some of the ideas, especially in the mid cap and small cap segment.
Okay. Now, finally, Mr. Patil, I can't let you go without asking you about, an investment strategy. With so much uncertainty around us, what would you recommend, or rather, what sort of investment strategy would you recommend long-term investors? Would it be via SIPs? Would it be via, a lump sum investment? Because and additionally, of course, in the last few months, we've seen a lot of investors look at the market and say, okay, look, it's up. Let me try and redeem some of my mutual funds. Is that also the right approach?
So, I think it all depends on what your outlook on the market is from a medium to long-term perspective. So we are positive on the markets because we think that there is earnings will recover fairly strongly in the next 3 to 5 years on the back of good recovery in domestic side. And we are in a cycle, earnings growth cycle, where the earnings growth will be better in the next, say, 3 to 5 years than what we have seen in the last 5 years, where the earnings growth has been fairly tepid in kind of a mid-single digits. So the market should, medium long-term outlook market looks fairly good. Which one should get a reasonably decent returns adjusted for the risk. And that's why investors should not lose an opportunity to really invest in the market. Again, I would say that the best way is to participate through SIP, because at this point in time, we are seeing some kind of short-term headwinds because of the second wave of COVID. While we believe this is a more transitory phase, it should not have a long-lasting impact in terms of our outlook, because I think there are measures which have been taken. There is vaccination which is available, which would ensure that we come back to recovery phase pretty soon. And the current correction, what we're seeing in the market is, I think, a good opportunity, because a lot of stocks have corrected significantly, while the market is just down around 5-6% from its peak. Quite a few stocks are down like 15, 20, 25%. So it's again providing a good opportunity to buy stocks at a more reasonable valuation. And this correction phase could last probably for a month or two or so. So if anybody is looking to make a lump sum investment, I think it would be best to spread it out and not do it at one go. One needs to be a bit cautious over here, but not be too worried and not lose on sight of the long-term returns, which the equity market still hold potential for investors looking at it.
Okay, Mr. Patil, on that note, thank you so much for joining us today on the show and, introducing your NFO to our viewers as well. I'm sure it's been very useful, and our viewers will be able to take an informed decision on, how to view this this new multi-cap fund that you all are launching.